Checkpoints is presented by pharmaceutical company GM Pharma.
The foreign direct investments in Georgia amounted to $197.7 million in Q3 2024, down by 55.2% from the adjusted data of Q3 2023. Decrease in equity and reinvestment is main reason for the reduction of FDI, according to the National Statistics Office of Georgia. As of the document, equity amounted to $131.2 million in Q3 2024, which is 66.4% of total foreign direct investments. The volume of reinvestment totaling to $353.4 million, 13.6% down than the adjusted data of the previous year. The Netherlands, reaching $60.2 million in Q3 2024, was the major foreign direct investor country. Malta was the second with $58.3 million, followed by the United Kingdom with $55 million. The share of three largest investor countries is 78.7% of total investments. The largest share of FDI was registered in the manufacturing sector, reaching $63.6 million in Q3 2024. Energy sector was the second with $43 million, followed by the trade sector with $32.1 million. The share of three largest sectors is 70.2% of total investment. In October, Georgia bought 175 million kilowatt-hour of electricity from Russia. During this period, the country also received electricity from Azerbaijan and Armenia, although in very small volumes. In total, this year, electricity imports amounted to 700 million kilowatt-hour, although it will increase further in December-January, as Georgia's generation facilities are almost shut down in winter and country consumes either imported electricity or electricity generated for thermal power plants. In recent years, Russia has been the main supplier of electricity. The electricity purchased there is also distributed to occupied Abkhazia. Last year, Georgia imported 786.5 million kilowatt of electricity from Russia, almost all which was consumed by Abkhazia. As for consumption, according to 10 months data, the total consumption across the country amounted to almost 12 billion kilowatt hours. Giorgi Kakauridzeh, the first Deputy Minister of Finance of Georgia, on Monday presented updated macroeconomic parameters during a meeting of Budget and Finance Committee of the Parliament, indicating a projected real economic growth rate of 9% for 2024. He also said the anticipated rate of inflation had been adjusted downward to 1%. Kakauridzeh noted the nominal gross domestic product was projected to reach 90 billion lari, while tax revenues from the consolidated budget were expected to total 27.26 billion lari. The committee identified an increase in planned revenues for the consolidated budget, which are expected to rise by 1.27 billion lari and amounted to 25.61 billion lari. Similarly, the total receipts for the state budget are set to increase by 1.12 billion lari, bringing the total to 25.69 billion lari for 2024. The allocations for state budget will reach 25.93 billion lari, reflecting an increase of 900 million lari over the previously approved plan. After discussions, the committee supported the proposed bill on amendments to the law on the 2024 state budget of Georgia. Georgian economy grew 11% year-on-year in October, while the average real gross domestic product growth for January-October period equaled 10%, the National Statistics Office said in late November.
The Checkpoints is presented by pharmaceutical company GM Pharma.